from where you sit.
More than 100 years ago, Stanbic Bank Kenya began with a branch in Mombasa and their second one in Eldoret. Today, they have approximately 26 branches across the country. Now, Stanbic Bank is recognized as a leader in investment banking, one of the best not only in Kenya, but in the region, including Uganda and Tanzania as well, as we saw at the EMEA Finance Awards 2018. They have posted fantastic profits for this year. And to tell us more, joining us is Charles Mudiwa, the CEO of Stanbic Bank Kenya, on the trading bell today. Take a look at his profile. Mr. Charles M. Mudiwa is a business leader with expertise and extensive experience in banking who has set up a bank from scratch as well as leading stock exchange listed financial institutions. He is currently the chief executive at Stanbic Bank Kenya. Charles has previously worked as an executive director for Agribank and Stanbic Bank Zimbabwe, where he acquired experience in bank management, including retail, operations, corporate and treasury. His key achievements include successfully setting up Agricultural Bank of Zimbabwe Agribank, launching of the first interbank financial inclusion product in South Africa, growing Standard Bank Malawi from bank number 3 to number 1 on PAT, and being recognized as the Bank Magazine Bank of the Year for 6 years, 2007 to 2013, Best Employer 2011, Best Equal Opportunity Employer. In South Africa, he was part of the interbank team that set up Mzansi Bank account. He was responsible for the rollout of banking services in the previously disadvantaged areas of South Africa, formulating and implementing the mass markets value proposition. All right, thank you so much for joining us, Charles. It's a pleasure to have you.
Thank you very much. It's a pleasure as well.
Okay, how about we begin with the fact that you posted some very mind-boggling, I would say, results when it came to increase in profits for 6 months ended 30th June this year, 101%. And as I understand, as of the end of Q3, you've noted profit after tax at 47%.
Yes.
So to what do you owe this solid performance despite the, tricky yet improving macroeconomic conditions?
Well, thank you very much. And I think the first thing that we have to do is acknowledge the support of our customers in this journey, because at the end of the day, we are there to service our customers and all the key stakeholders we work with. And so part of that has to be about a very clear customer strategy, about which customers we're working with and how we're working with them and what value we're giving to our customers. And when we built our whole franchise around understanding our customers and being very clear about them. The second thing that we also need to acknowledge is the contribution of our staff in terms of them understanding how to deliver the strategy, but also being focused and being conscious about how to deliver value to our clients and being exceptional in understanding what the clients needs. So that kind of contributed to that. On a financial basis, also an improved in our NPLs as well, which you probably see was significantly different from what we had the previous year. So we've seen that kind of improvement coming through in terms of how we operate in the business that we do in terms of our portfolio that we've put on the books.
Okay, fantastic. Now let's talk a little bit about the general banking climate, because last year was the first full year that the banking industry experienced the impact of the Banking Amendment Act 2016 that had introduced the rate cap. So how has this affected your performance, and not just your performance, but in terms of how you look at lending as an institution? Because we do know that this has, of course, driven a lot of banks to lend more to corporates, to government, as opposed to SMEs and the likes. So how has this affected your strategy when it comes to lending?
Well, yes, the red cap did have an adverse effect on us, particularly on our personal business market banking side. And we did feel the impact of that, and we still do feel the impact of that red cap. So our sense is that, yes, there is an impact that needs to be dealt with, which is just not just from a point of view of just the SMEs, but I think the broader impact of how we extend credit and how we take risks. So the bottom line is that your risk appetite of course, it has to be dampened because you cannot price for that risk.
Yes.
And therefore, you have to really think about what is your risk model. So the steps that we've taken is a couple of them. Number one is to start really looking at how we build our risk models and what we think about the risk models that we operate in terms of how we give our credit. Secondly, we have to think about the tenors that we can do. So you tend to find you don't have to give much more shorter tenors rather than that you did before, because you cannot price for the longer tenors in that respect, and understanding that. We still have done some work with the SMEs, but we have now to really look at how we finance them. And part of that has to do about how you digitize some of the work that you do. So our cost structure has had to change in terms of how you look at the cost structures that you do and to try and deliver a low-cost model to be able to deal with it. But you also have to think about individualized risk profiles, because at the end of the day, it now boils down to each individual getting their own individual risk. So we've had to build tools that deal with individualized risk profiles. That actually then says, if I'm looking at you and I think, okay, you've been with us for the last 15 years, how do we see our risk with you?
Yes.
Versus somebody who's just joined us, and perhaps we don't have a good track record with them. So how do we deal with you, and how do we be able to lend money to you and be able to do transactions with you? So it's understanding the full risk profile of the client, being able to price it accordingly, but also at the same time being able to deliver a more efficient value to the client.
So essentially a greater understanding in depth of the client and where they're coming from, so as to assess the risk profile accurately.
Yes.
Okay, and we've seen quite a few institutions talking about repealing the interest cap and amending it. What are your thoughts on that?
I believe that it has had an adverse impact on the market, because clearly you cannot price for your risk. So while we understand the intention behind the law and we fully sympathize with the need for us to grow the SME sector, something that we as a bank are actively pursuing, we've set up an enterprise banking unit which actually specifically focuses on growing the SME sector and understanding their needs. But we also feel that putting a pricing cap is not necessarily the best way of doing it, because there are other models that we can explore that actually addresses that same aspect, and we still see the growth that we require. And there are a number of models that we can look across the world in terms of how we do that. And part of it has to do with what is the delivery model that we're looking at, what is the source of funding that we need to give the SMEs. But over and above that, funding is only one part of supporting SMEs. There's a whole other part, about two other important parts that are always overlooked. Part number one is actually the business management skills that are required to run that business, because what I tend to see, and I see a lot of people, when they walk in my office, the confidence we have is that I've got this idea, how do I put it across, what do I need to do? So you've got an idea and you think it's making money, but translating the idea from an idea into a commercial entity is a gap that we don't often close with SMEs.
True.
Because somebody say, I've seen this thing, it can work. Then I say, translate it into money in terms of how you actually make it a commercial entity. It becomes a problem. So it's getting that business process from idea into commercial entity, into funding, into then being able to scale it up to make it worthwhile. Those are the steps that need to be followed. The second part, which is important, is markets. Because you can have an idea, you've put it all together, then you have to go to market and get people to actually buy. And in this context, it's always about, number one, what problem are you actually solving? Because unless you're solving a problem, people won't come to market. Number two, can you translate that into a solution that people can actually agree to? In other words, a practical solution that helps people. And then lastly, can you then be able to scale it up and make an impact with it and then grow the business? Now, unless we deal with funding, business planning, and marketing, we cannot actually address the full problem of getting SMEs to where they are. Because a lot of them may get the money, but then they fail in the business planning, or may get the two and then fail to go to market because they cannot then be able to access the markets and open up the markets. Because a market could be about access, in other words, actually getting into the market, but it could also about just being able to sell the things and put them across and get people to buy the solution. So it's getting those three legs right. So I just feel we focus on one leg and missing the other two legs.
So there needs to be a lot more work in order to train people, in order to have them know what skills are required for management, all the way through to, you know, expansion eventually, and the whole cycle itself, not just the funding bit, as you say. And yeah, they do contribute a huge chunk to the economy. So there needs to be more work, I suppose, done on that front for sure.
There is, and for us, for example, one of the things that we always think about is that over and above being a bank, which is a financier, we also a consumer.
Yes.
So we also say, how do we support SMEs? Because we also have a huge spending budget, which we, if you want to call it, procurement budget. So how are we supporting SMEs in our day-to-day life? So if you want stationery, how do we support SMEs who do that? And not just SMEs, we also have a deliberate bias towards women businesses as well. So we're doing a whole proposition around how do we support SMEs, but also women-run SMEs, because that's also an important part. And how do we deal with that? And I know it's a different topic of discussion about gender.
It's interesting, yes.
That's also something that we also think about. And that's something that we as a bank are proactively and consciously dealing with. So you find, for example, our parent company just recently joined he for she part of the global group chain around this, because we deliberately have a very clear view around how we support women SMEs as well. And we will be doing a lot more work going in the future around that, and you'll be hearing a lot of announcements around that from ourselves.
Okay. That's very nice to hear, because even as we talk, of course, to the two-thirds gender bill in Parliament being, you know, discussed, debated, and all those things surrounding that. But let's move away now to digital disruption. I know we're jumping from a lot of different spheres that you touch, actually, because you do. And when we talk about mobile technology affecting the banking sector in Kenya, how is Stanbic positioning itself so as to take advantage of technological advancements and increase your market share as you do so? Of course, you know, we've seen blockchain technology being talked about a lot and incorporated possibly into the whole banking world. What are your thoughts on that?
We see this as very progressive, and we're actually quite excited about these new developments and these new technologies, because we see them helping us become better, serve our clients better, and give better value to our customers, but at the same time reducing the cost of delivery, which is the point that we're making. And we have been part of this journey for quite some time now. I mean, people might remember we were the pioneers of the electronic T-board, and up to now I think we're the leading bank in that space. When everybody was walking away from T, we stayed in and provide the infrastructure for tea trade in the country, and we still do. So we were on this digital journey from way back and have been running with it. We're the bank that first piloted the what do you call them, the bulk note acceptance, you know, where you can go and bank your money, and we're still probably the leading bank doing that. So we see ourselves on this journey and working in the innovation and providing that platform that we require. So we see it as a very fundamental and important part of our future in terms of disruption. Now, I know people call it disruption, but the reality is that it's no longer disruption. It's actually normal. Because, I mean, if you're looking at here at yourself, how many of us now walk around with our phones in our pockets? I mean, it's no longer disruption. That's the way we live. And we see ourselves in banking as making the way we live.
Yes, very much so. And as we talk about mobile money, of course, the tax policy that saw excise duty on bank charges increase from 10 to 20%. And there have been a lot of people say that's, you know, on the consumer, not so much so affecting the bank itself. How do you see that?
Well, it has an effect because we still have to do, our customers are still part of us.
Yes.
So the impact, yes, does actually has an impact on us as well. Because in terms of then people being able to continue to spend and being able to do the transactions they're required to do, yes. So
they may be a bit more apprehensive to then transact. Yeah. So how have you dealt with that?
Well, we number one is educate and explain to people. And try and understand how they can do it, but also look at the options that they have in terms of how they can now be more efficient in how they transact.
Okay. Yeah. All right. And Stanbic Kenya and the Industrial Commercial Bank of China unveiled a new initiative to promote tourism and trade between Kenya and China. Tell us more about this.
Well, I think for us, what is important is that we see an increasing role that relationship that we're building with the Chinese from both a trade and funding, infrastructure and all that. But also we're seeing an increasing number of Chinese tourists coming into Kenya. I mean, China South, airline flies into China and into Kenya, I think 3-4 times a week. So we're seeing that trade happening, not just from a point of view of just the infrastructure that we see is visible, but also see tourists coming in. And we wanted to provide a platform for this tourism. But also we're looking at it from another point of view, that a lot of Kenyans also do fly to China, whether on business or shopping or even tourism as well. And how do we provide a platform for both tourists on both sides as trade happens, for them to have, at a personal level, some benefit that they get. And I Go China, I Go Kenya is really about that. That you've got available by using your card, a shopping, almost a shopping supermarket, an online market where you can be able to order things. But also more importantly, which is I think something that we value in this relationship, is that it guarantees, in this day and age where people are talking about fake things and fake news even, I mean, when you buy that product on our platform, you're guaranteed of quality. And I think that is probably the most important thing, because a lot of people will go to China and say, well, I can bake it, but I'm not sure of the quality, because I don't know the quality, I don't know the brands. But by getting onto our online platform, you also know you're getting the right quality. Similarly, Chinese tourists coming to Kenya, the merchants that we put on that on that list are well vetted, and we know they guarantee us a minimum quality. So the brand of Stanbic being a very strong brand, and the brand of ICBC, which I'm sure, as you know, is the biggest bank in China, but also the biggest bank in the world, guarantees you a certain level of service and quality that you are getting. And it's two very strong brands coming together, the biggest bank in Africa, the biggest bank in China and the world, teaming up together to give you a quality guaranteed. You're not expecting anything less, because our reputation depends on it.
Fantastic. Well, on that positive note, I want to say thank you so much, Charles, for joining us on the Trading Bell today and shedding light on a variety of topics that we've spoken about.
Well, thank you very much. It's a pleasure, and wish you all the best. And by the way, Merry Christmas.
Yes, we can do that too. Of course, it's you know, the festive season, and so I'm sure our viewers would appreciate that.
Yes, we wish everybody, all our customers and the future customers. We only have two types of customers: present customers and future customers. Wish you a wonderful holiday and a